Market vitals, the levels you need to triage the market. We talk levels all the time. Matt, our patient, the equities, coming down with another Nancy Pelosi diagnosis here, a little less healthy the last couple of days. What do you make of it, Matt?
Like we talked about the last few weeks, the bonds eventually will catch up to the equities, and they have. It's pretty basic. And again, don't forget, T+3 was last Tuesday. That's when most hedge funds mark their quarter, their month. So that was last Tuesday, and that was the high. So the Fed knows us. They had the algo on, and now the algo's off.
Let's clarify this again too, because I agree with you, but a lot of times I think the nuance is it's not just one algo, because there's dozens and dozens of players.
I'm just being facetious and silly.
I agree with you, but I think
but most of the algos, like most of the memes, are the same idiots running the same programs. Like there's
wait
a
a second. I'm not
there's
going
a lot of guys. There's a lot of guys playing moving average buys and sells. And
there's also, I think possibly, there's also giant players that want to market and have the ability to affect the market in a short-term manner.
Yeah.
And they do. Last week we talked about it in one 5-minute bracket. The S&P, not micros, minis, traded 126,000 contracts in one 5-minute bracket. Now that kind of volume is, let me be a little facetious here and or cynical. Somebody needed to know that much size to move that much size. And so, listen, at the close, we got to sell 126,000 contracts. Okay, maybe I should accumulate all day and push. And doing that, you're going to push the market higher. And then I'll take you all out in one 5-minute bracket. You can get all that liquidity placed. Not a problem. And I know this to be a fact in the open outcry environment on the trading floor, because that's what's happened. If you were an order filler and you had a giant number to move, there were whispers. Let me just say that. And you can't tell me that the whispers were only in the open outcry environment. That's kind of the mechanics of the whole thing. There we go. Now we're back to real price discovery. And I think there's a real argument going on here this week on this week setting up more for what's going to go on in the rest of the quarter.
Yeah, I mean, I've talked about 143s as being the initial, that's like the level on the weekly chart for the bonds. That will hold probably because it's the point of control on the big long-term chart. And so if that holds, then you'll get a little bounce. But again, I think all bounces will be sold. And I think eventually we're going to trade down to 110, 100 probably.
We got a couple great things to talk about today. But first,
Here, let me just show you the bond chart here real quick. And
do it.
It's a 610 chart, and then so that goes back. Really, this is almost a 5-year chart, a little over 5 years. But you can see right where we are, Bob. We're right here, 144.12, and 143 is like this bar right here, and that's just this chart. And you can see the low for the last 5 years is down here at 136. So it's likely we'll trade there. But when you start looking at like the long-term charts, even longer term, you pull back and scale back even further. I mean, you start to see like there's a lot. Like this is right where we are. This is that 143 that I just mentioned right there. Right, that's on the ledge. So we had the shorter term 6-10 minute. Now you're looking at this going, well, that's really not pretty. Like we're just getting into value, and this comes into play down here at 113.
And again, that long-term chart means that it's not going to happen today,
it's tomorrow. Not going to happen tomorrow.
I mean, this could be the rest of the year as we work.
No, it could be
2 years,
5 years.
Right, exactly.
And so there'll be a lot of bouncing, but you can see why this area, there's been a lot of interest in the past at 143. So you'll probably get a buy here, or if you don't, then it's going to slide down here to this 136, which is kind of the left side of that parabola on the time, continuum, right? That's the way you have to look at the pricing when you use market profile, volume profile. So somewhere, if it doesn't hold at this little point, which has the most hands, But again, it probably will. But if it doesn't, you better be quick to go the other way. Like say 142.5 is your risk. Like if you buy 143, great. And then your risk is one, it already dipped into 143.28 today. So you could even start nibbling all the way down, right? 150, 143.28, 18 and 08. You leg in, and then you're wrong if it goes below on a close 142.5. It's a pretty simple trade. But again, this is a scary picture. If this doesn't catch your attention, but again, trend line traders go, well, we're still in the trend line. Yeah, we probably are, again, but it's on every metric here, we're actually ticking through it here. So this is getting, particularly dangerous is where it is. It could really, and the thing about it, Bob, is if it goes through here, if it goes through that 143, it could really whoosh. It could move fast. It could move quickly because we haven't seen this in years. We haven't seen below this price level. And, this 136 was October of 18. And before that, you'd have to go back to, Obama first term, and that was 131. That was the next low. So it just starts getting into play. And again, I don't care what you say, like this environment is tough, and we need to have higher interest rates to squelch the inflation that's happening everywhere. It's complicated. It's very complicated.
Reminds me of a movie.
Mm-hmm.
In a world, Matt, in a world where the highest paid public employees are amateur athletic coaches. Matt, I love this this map that you shared because it really smacks the liberal the liberals right in the face. Like, you're so for the people, yet you allow this to. How do you allow this to happen? That the highest paid public employees are football and basketball coaches. There's a few spatterings here, but you notice all those states where it's not, they don't have major sporting programs.
Yeah, the Dakotas, right?
I wonder what Jerry Tarkanian made back in the day at UNLV. He was probably pretty high paid.
Yeah.
Anyway, Matt, bring it up. Let's just look at a few of them.
Yeah. I got like the top 9 here, and this is pretty recent. So you got Calipari leading at the University of Kentucky, 9.3 million. Dabo Sweeney at Clemson, 9.3 million. Jimbo Fisher at Texas A&M, 7.5 million. Jeff Brome, I don't even know who this guy is. Is he the new coach? I don't even know. Is that the bald guy that's been there for a while? I don't even know. I'm like, I've never even heard this guy. This guy makes more than, no, he doesn't make more than, but he makes a shit pile for Indiana football. I mean, it's not Indiana basketball. What's going on there? I mean, Nick Saban, 9 million. Harbaugh, 7.5. Lincoln Riley, that's old because he moved on.
Let's just talk just about a little bit of the nuance on the pension component of this.
Yeah, no,
that's just staggering.
Like you look at like right now, the highest paid public employee for Oregon is still Mike Bellotti. He was the old coach because he's getting pensions and his wife gets a pension. Yeah, they're collecting like 6, because what they do is they take like your last 2 highest earning years, they average it, and that's the annual pension tax free that you and your spouse get until you die and she dies. So you both get it.
We joke about it's good enough for government work, but this is
so you wonder why, like, people go, oh, Harbaugh should go pro. I'm like, why would he? I mean, he's got like, if he gets fired next year, he's got 40 years of pension money that's going to pay him 7, 8, 9 million a year. He and his wife, third wife, fourth wife, whatever he wants to do.
All right, man. Another breaking news. And breaking news. This is our breaking news segment. Check this out. Breaking news. Tracy, our shy girl, says Chicago Eek. Lauren Jiggett shared, owner of Water Tower Place, are handing the property over to its lender. Here's the keys. Nearly a quarter of all Mag Mile retail space is vacant today, more than double its vacancy over the last 4 years, or for just 4 years ago. A lot of things at play here, Matt, on retail, but you cannot tell me that lockdowns and smash and grabs and getting mugged on Michigan Avenue doesn't play into the long-term troubles of you trying to find long-term tenants. And Water Tower Place it's a landmark, man. It's been there. My whole life, I remember it being there next to the John Hancock. We used to go down as a family every year and do a family Christmas trip, go out to dinner, go to the water tower place. I mean, it was fantastic. And troubles in retail.
Yeah, it's real. And let's take a look at a few of the big names. And the thing about it is, and I'm going to start with the long-term chart on all these, just because I think it's a real good depiction of where we are. This is, again, 1994 to today. This is a weekly chart. And this is Simon Property Group, which is the largest. This is the largest of the public REITs that focus on retail. And, most of you probably heard of Simon. And the reason why people own these companies is Simon pays a nice fat dividend, 5.16% today, right? So they're doing well. But to your point, they're probably have some exposure on every Miracle Mile type place across the country, I would imagine. I don't know where their strengths are. Maybe it's West Coast. And again, I think, it's interesting. We live on the West Coast and we have an outdoor retail center and those do pretty well, but you're really not going to have one of those in Chicago, right? The Miracle Mile, you're going from store to store, but you still have those mall areas where you're locked in and you got 100 stores. So I think the picture that I'm trying to explain here is retail, as far as an investment, I think peaked in 2016, and you can see that, right? It had a 8-year run, Obama years, and now it's over. And so now the reality is, this was the COVID. We came back and tested. Again, this is where, when you get events like this, COVID, 9/11, that's where the long-term work really comes to play. Because if you're smart, you want to find, that's where you'll find value plays on those days and weeks, and you don't have a lot of time to do that. And, you had plenty, but the point is, if you know where those points are, you should always have orders in, just have them standing, because you just never know when they're going to get hit. And, again, if you pick some up there around 48.50, you've had a 3-bagger in the last, year and a half, but it's rolling over again. So that's what
it is rolling over. And how many inputs here, especially the interest rate component of it, has got to be weighing on these things. But that's a perfect look at, if it doesn't hold this high a value, why wouldn't it retrace at least, some of that giant fat value range?
Right. Yeah. And again, it's interesting when you draw a fib, you're like, okay, yeah, had a little throw over the 61.8. So it's behaving, very mechanically again, which it should. So it's a trader's vehicle right now. And I would say if you now's a good time to sell if you were long too, because it's not going back up to 228. It's anytime soon. You can't stop the momentum on a long-term chart. And then let's look at Realty Income, which is another. This is a $42 billion paying a 4% dividend. Again, this is a little prettier chart, but it's heavy, right? It's back at the top of this range, and this is a weekly chart again, going back to 1994.
We both said coming in, wow, they actually look, they're on the higher end of where you would think that they could go to,
right? And
have not really rolled over hard yet, like so many other individual names have,
right?
So opportunity here, opportunity.
But again, I think this is a great sell up in here, and you're just at the top of value. You're right into the point of control. You're likely going to be cut in half. You're probably going to trade back to 35. That was the low here at some point. These lows will be tested just like they will on all equities. It's going to come. The COVID lows will be tested. They have to be. We have to see if that was real or not. We really do. And that's across a lot of markets. Then you have KIM, which is Kimco Realty. Again, these companies are all well capitalized, been around a long time, but been in a bear market for some time. This is a dying dinosaur here. That's what I see. And it's because retail's done on Instagram now. It's done on Facebook. It's done
so many other places.
Other places, right? And so people don't have time to go to the stores, nor do people like you and me never went to stores to shop.
That's not true. I'd go to the bar next to the store.
My point is, like,
the Rusty Scupper. Let me name a few of them. You go shopping, I'll be here at the bar.
Right, but you would only, that's my point. You would only go to go get your pair of pants that you needed because you blew out, because your fat ass blew out the pair you were wearing.
Man, I am one of those guys too, that, and you know this about me. I have lost 200 pounds in the last 2 years, the same 10 times. And again, I'm back up at that contract, working those highs. You should be selling calls here on my weight right now if you're smart.
Right.
And I'm one of those guys that still has the Hope pair of pants in the drawer. Where
Yeah.
You pull them out every once in a while and you get them up just past your knees, maybe. You're like, who are you kidding?
I'll
You're
keep
not
these
talking-
for another 2 years.
You cannot get those things on. Like, stop it already.
Regency Center is another one. This is a 12 billion, little smaller. We're going down in size here as we go on. And again, these all look like, if you want a basket of short sales with back spreaded calls, go for it. I don't see these. I don't see a lot of risk in being short these names going forward in this environment. I just don't. I don't see that changing. I don't see big malls and retailers pivoting in a big way and somehow figuring it out, because that's a lot of space, unless they're going to become Amazon distribution centers, which is possible, but they're building their own too. So, it's funny, like there is some of that going on. There is some, redistribution of past the way business used to be done at a mall, and there's no doubt some of that will happen. Right. But maybe I believe that price is kind of where we are. That's already built in. Even if you're able to transition to some of that, that's these prices, like that's already priced in. So don't think that, oh, I'm the only one that thinking that. I'm not the only one thinking that. It's been well thought through. These guys are way out ahead of the curve. So that's not a good sign. In other words, this rally should be sold across the board in this sector. And again, you and I talked about that. This is the type of work you need to do as a trader to look at things. And it's really easy to do it on a sector basis. And you can see it's consistent. Like there's not a lot of change between these charts, besides the market caps. So this is FART, Federal Realty Investment Trust. And that's your name, FART. And
Yeah. I'm a market maker in FART, actually.
So again, it peaked here at 140 recently, and now it's down to 120. Today they're getting hammered, which again makes sense because the bonds are getting hammered again. I mean, the bonds are hitting another low. But look for rallies in these things, and when they get the next rally, push, put some on, sell some. Get involved.
Sell calls.
Get involved and give yourself 6 months, 9 months, because I think these are going to be good trades. I think they're going to be really good trades. Just like retail at the end of 2021, we said short it all, and sure enough, you look at Home Depot. Again, kind of speaking of big box retail, Home Depot. Remember that was trading 420, it's down to 302. Lowe's, that was trading again. 263 down here to 200. I mean, that's bear market.
And not only that, man, when you look at that, just look at that. Everybody look at this. All right. It's really just starting on the right side. Now, Matt, bring up Penn Gaming, which we talked about through this entire thing. Look at that. There's the Lowe's chart. Oh, wow. That's what a full right side looks like.
Yeah. Well, not full, but it's 60%.
Exactly.
But it's still going to get cut in half down here to 18 now. I mean, this is the thing. We've been calling for 20. Now I'm going to say 18. It's going even lower. The blood, the rats just keep jumping. I mean, this thing is hideous. There's no reason to buy it. I mean, it's like buying, Penn Gaming got into sports gambling only, right? They're not in MGM where they have hotel rooms, 3,000 a night. All these, 3,000 rooms a night at 6 different properties. Like that's a huge income source. And the food, Penn doesn't do any of that. They let you gamble on sports in a handful of states. And there's tons of competition in all those states. Like, it's just like your pot business. I mean, even though we're getting closer to federalizing pot, Canopy,
another right side brought
Canopy doesn't look good. It still doesn't look good. I mean, the last time we talked about it, the low was 665. Now the low is down in the 4s, and it's trading 660 after a rally. You can barely see that rally that we had from the federalization. It's already sold off. I mean, you look at the last few days. Like, again, the market knows. Like, the smart money knows. Every time that news comes, it just gets puffed. It gets puffed because there's so much marijuana. It's a weed. To your point, Bob.
It is.
There's no
anyone
margin.
can grow it. Trust
Anybody.
me.
Yeah.
Water and sunshine.
and not even that much water is needed.
All right, Matt, let me work on my graphics here because we got some more breaking news. I shared it with you or spoke about it yesterday, how they had, well, where is it? Where they had unveiled this giant Bitcoin bull in Miami. The mayor of Miami, very, very crypto forward thinking, and he's talking about the financial center is going to be moved to Miami from New York. But Fulmo has pointed something out here. He says, I hate to tell you, but the Miami bull got no balls. They forgot to put balls. Even the Wall Street bull has balls, by the way, just to be perfectly clear.
It's got a full sack. Full.
And this bull is more like a Ken doll, Matt. Speaking of Ken dolls, you had called again for this topping action as we rolled through the month and the quarter in Bitcoin in particular. And it has rolled over. So let's take a look at that. Here it comes, folks.
Bitcoin? Hang on one second.
Bitcoin. The ballless Bitcoin.
Yeah, this thing rolled over. We talked about it last week when it was trading 48, 49. I'm like, I sent the warning signs and here we are. Again, it ran with the equities, peaked out at the same time. Everything peaked at the same time. So again, all assets are one. I'm not making this up. I'm just telling you what I see. And it's all assets are one. So if you're trading things and you realize and you recognize all assets are one, you just double your position. You don't have to have 5 positions all doing the same thing, right? And I'm sorry, I didn't have the chart up as I was showing you.
No, that's right. So here it comes.
48,000, and all the way down here, we got down to like 42s. Yeah, we got down to 42 so far. Again, looks to me like it's going to trade back to 39,000. So just a matter.
And again, we've put in, a pretty big trading range here in that profile.
And you have 10 days of trapped, and you have 10 days now of trapped people. And by trapped, I mean, from 48,000 down to 42. So any bounces, those people, anybody that bought at 45 will sell. Anybody that bought at 46 will sell, etc. if we were to bounce. So that's what I would do. I would put a sell anywhere up in here, 45, 46, join them, sold. Because it's just going to go, if you're not short already, that's all I'm saying. The bounces need to be sold. And if you have a longer time frame, sell it here because it's going to go down to 40 and you'll make another 10%. That's a nice gain. It's a nice trade.
Let me share for a second.
Yeah.
We got a little, what's really going on, if you'll allow me to share. Here it comes. We share all the time at marketvitals.io. If you haven't joined the community, you really should swing on over. It's all free today, just like ice cream and lollipops. There we go, Matt, because this is what's going on right now. Tiger, we got a little Masters peek in here. Wearing the just gorgeous pink here early.
Fuchsia.
He's been doing a lot of that. He's been doing a lot of the stretching. And I said it before, like
what happens when you get over 40, your back starts locking up, especially a guy that the rotation like he has. I mean, you can imagine.
I think he's waiting for the green to clear so he can really lay into this.
He's waiting for the 3-year-old for whoever kept leaving his wedge on the. Remember that in yesterday's? Did you see that little kid?
I did not. Slowing play.
He had the whole white, caddy outfit on, and I think he was caddying for his dad, and his dad, the kid kept leaving the wedge on the green. So there was a video of him running back to the green, and the crowd's cheering him on, and he's like fully. Awesome.
All right. I thought my timing would be better on this. By the way,
thanks. I
got to talk to the production truck and say what Tigers -1 through 7.
Tied for second.
I just think it's a great story. I mean, whatever you want about the guy, his ability to rebound from physical adversity is inspiring to say the least. All right. That was the worst Masters check-in in the history of Masters check-ins.
It was a nice, pretty watching him swing.
The worst.
Warm up and wait.
All right,
think
man,
it-
one more look at the bonds before we go. Oh, is that a terrible shot? I'm watching it. I'm watching, that looked like me shooting. Scheffler's shot. He just worm burned it into the front bunker. I'm not kidding you.
Well, he was probably trying to use a driver off the tee to get home in two or something.
What else you got, if anything?
Well, what do I have? The U.S. Senate just voted to remove most favored trade status for Russia and Belarus. So that happened today, which, okay, that's really not going to help people. Again, at some point, some of this news has to come out and affect. And we've talked, you and I kind of talked about this yesterday. I think what we're seeing right now is you saw it physically with that film of Obama and Biden at the states dinner. Like, when was we haven't seen Biden hold one of those during his presidency. Obviously, COVID, whatever, yada, yada. But there's been no pomp and circumstance because nobody wants to go to anything. They don't want to be at anything invited by Joe Biden. It's the kiss of death. Like, that's the point. Jen Psaki left because she sees the writing on the wall. Why wouldn't she collect a fat freaking $20 million paycheck for doing nothing but, spouting off lies like she did? And she didn't get paid to, do those lies as the chief of staff. So it's a much better, chief of press.
Way better gig for her.
Way better gig. And so, they just told her, go out and lie for 2 years and then you'll have a cush job. There you go. Here's your payday. Here's your payday. I mean, seriously. So yeah, Tiger Woods is -1 with a bunch of people behind Taylor Gooch. I'm rooting for a guy named Gooch any day. I don't know about
right
you.
that man. And I saw what's the kid's name? Oh my God. It's an Italian, like incredibly Italian name.
Oh yeah.
Oh my God.
Oh,
I can't remember it now, but I was like, how many kids got that name in the past 25 years? Because he's young.
Giovanni.
Yeah, something like that.
Yeah.
All right, Matt.
Yeah.
We got
It's
a little pump here that I'm getting ready to sell in the equities. I don't know what just came out, but they've run them a little bit.
like he's still waiting. Still waiting. That's his caddy up there, giving him a target, but he's still waiting.
He's still waiting. Yeah,
He's
he just hit a shitty shot too.
He's 269 out. It's a par 5. They're all trying to get on in 2. I think this is.
He ended up about.
He's the shortest knocker of the 3.
We said that coming in here. He's had so much physical stuff going on. His swing now is really.
Which probably will help him because
but he's not trying to swing out. He can't swing out of his shoes anymore. So
right. He still looks fairly ripped to me. I don't know about you. I'd take that physique any day.
Well, for sure, he's hit the gym more than you do. And he's got the same receding hairline.
He does.
All right, Matt, thank you so much. Please join us at marketfellas.io. Please share, retweet, plagiarize the broadcast far and wide. Tell everyone. These guys, at least we come with honesty, man. Honesty and integrity, our number one goal.
Oh, by the way, oil was down to 94, almost 93 today. Again, it's going to test that low in 93s. And again, nobody's, you stop talking about this. What happened to the Putin inflation? Now we're just back to regular inflation, but your prices are still the same. So again, nothing's changed. Nothing's changed. Don't blame it on Putin. Don't blame it on the bad guy over there in the East, because he's not to blame. I mean, stop with that. I'm so sick of that narrative. Please, you're an idiot if you say that narrative. You're a freaking idiot.
Right on. All right, Matt, thank you.
Thank you, Bob.